Welcome to my midweek market meeting, 21st April 2021. I'm back from my traveling back at home, so I have all the infrastructure. I hope the session will go smoothly. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagarnandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I use the Q systems for my trading. They run on TradeStation and Metastock platforms. That was the last slide of my presentation. Let's continue with the live system. As usual, we first look at the global markets. For the global markets, I am using Q Global running on Metastock. I always analyze the instruments using the standard weekly, daily at a glance template, starting with the Australia Index AXJO. In the weekly chart, it is going up. The week's candle is indecisive, though the color is still bullish. At this point, it broke out of the watermark resistance and the sideways range. As I mentioned at that time, Q traders, who are not usually breakout traders, would wait for a pullback and then for price to go up, hopefully from near the trendline support, to get a low risk buying opportunity. Today's candle color turned bearish. The shape is mixed or bullish, you may say, because of a very large lower tail. It closed very close to the upper boundary level, that is too extended to take a long trade. I would wait for price to come to the trend line support and then go up from there, thereby giving a low risk entry opportunity. When we study the USA market, you will see that this approach of waiting for a swing low helped me and other Q traders tremendously. At this point, Australian market has no Q trade setup. Let's see Japanese market topics index. Earlier, it had a trend line support in weekly, and at that time it had a trend line support in daily also. In daily, it had a trend line resistance. Based on those support and resistance lines, I mentioned that the price was inside a range in the daily chart, and Q traders would avoid trading unless it came out of the range. That happened one day earlier when it broke below the trend line support. One could initiate a breakout short trade setup at that point, and today price dropped significantly. The breakout trade that you could take one day earlier has covered more than the risk resistance, and you could book at least partial profit in the breakout short trade. If you remember, recently in the USA market, I shared a similar breakout trade setup. It was on a stock. The ticker symbol was INFY, INFI. That breakout also gave very high profit in a day or two, and that INFI breakout short setup was very similar to what topics showed us one day earlier. Now price has already dropped significantly below the recent high. It is at the lower boundary, oversold. We would not like to take any short trade now, and there is no long trade setup. There is a trend line support here. Price could bounce up from here. If that happens, then we may look for a long trade in fundamentally strong stocks at that time. There is another support further below. That level has the weekly trend line support as well. So this level around 1750 would prove to be a better support, because this support is there in both weekly and daily. Still, you could look for a bounce long trade setup if price can go up from the trend line support around 1870, 80, this area. There is a trend line support and also a watermark support at that point. So it is possible price will at least stop there or bounce up there from there for a few days. Right now there is no trade setup in topics also. Next, Chinese market index CSI 300. This is very beautiful, isn't it? When price came to the weekly trend line support several weeks ago, then I mentioned that we could take a long trade, possibly using short put vertical at that point. Since then, price has tried to breach the trend line support multiple times, but it failed each of those times. You could initiate a long trade using the daily chart at the swing low points. If you did that, as price went up, you could have enough profit, I think, in individual fundamentally strong stocks. This is the index. Individual stocks that were stronger would have moved up by a bigger percentage, and that is why I think you would have covered the risk distance in those trades. Now at the right edge, it is already somewhat above the swing low, and it is not in a clear uptrend. So I will avoid taking any long trade now. I would prefer to take the long trade at the lower point. In any case, the trend line supports, and in this case, they were in both daily and weekly together. They provided us enough signals to not to take short trades, even if others were bearish when price fell sharply. Instead, we could take quick long trades, swing trades, and profit from that. Next, let's look at the UK market, FTSE index. FTSE index broke out of the sideways range a few days ago, similar to the Australian market. And similar to the Australian market, I mentioned that I was not going to take it as a breakout trade. When an instrument is moving inside a box, the Q guideline is to try to take the long position at the lower end of the range, not at the higher end or not at the breakout point. That would be useful because it displayed a bearish headwind, possible reversal signal in the daily chart. From there, price dropped. The bearish headwind could catch the very high point of the price move. In weekly, it has come back below the watermark resistance, which was created by a bearish headwind reversal signal. This I mentioned many times earlier, that if a bearish headwind can lead to a price drop, when price comes back to that level, it is likely that some selling is still left. That often leads to a double top or a false upside breakout. In this case, there was a false upside breakout and price has reversed below the watermark resistance. If you were watching the chart regularly, then when the bearish headwind signal came, you could get ready to take a quick short trade using the headwind reversal signal. The headwind candle itself was indecisive in shape, so Q guideline is to not enter a trade on that day but wait for the next day, and just at the point when price was going below the headwind candle's low, using fine-tuned chart, 5-minute chart in the morning session, you could take a short trade. For that day, the stop would be just above the intraday high, and as price closed lower, you would have covered more than the risk distance. You could book at least a partial profit. Now it is already some distance away from the high point, so I wouldn't take a short trade at this point. When the bearish headwind comes, if all the checklist conditions are met, the headwind candle, the signal day, provides us the best shorting opportunity. And if the candle shape is indecisive, we could wait for next day. But now it is a bit too late to take a short trade. Here also there are multiple trend line supports nearby. The yellow direction line is also here. There is a likelihood that if price drops, it will stop or bounce up at least a little bit from those support levels. You may look to enter long positions in fundamentally strong stocks at that point. Lastly, let us look at Nifty 50 India index. It used to be the strongest of the global markets. It is still quite strong. The weekly trendline supports are still holding. However, in the daily, in several past roundups, I mentioned that it was moving inside a range. In fact, it broke below that range. It had a trendline support. It broke below that support on this day, tried to go up, and you may see it reversed again from an extension of the trendline support that was broken. That is quite normal. Once a breakout happens, price may tend to go up but stop at the extension of the trendline support that was broken and then drop again. That happened here also. This was an indecisive shape candle. Next day price dropped sharply. Because this day price dropped sharply, we didn't have any easy trading opportunity that we could initiate on this day, on the gap down day, because price dropped sharply. And from the candle shape you can see after dropping sharply at the open, it didn't go down, so we didn't have any gap shorting opportunity on the day, though price had a big drop. However, see the next day. Next day price opened up sharply and came down. That would have given us an easy gap short day trade opportunity. The more we study such setups, be it the daily weekly setups, the swing trade setups, or the intraday setups on different markets, different instruments, the more we get used to them and the more confidence we have to take them in whichever market or country we are trading. Let's have a look at Nifty 50, how we could take a short trade on the last trading day. which is not today. Today there is a market holiday in India. Let me open the intraday fine-tune chart for Nifty 50. I'm using the menu icon set up at the top. Let me remove some of the lines. On the last trading day, price opened here, and soon after that the early range high and early range low lines form. Price opened at this point, which was much higher than previous day's high. So this was a sharp gap up open, and after that price came down below the early range low. This was the point where you could take a gap short intraday trade, putting stop just above day's high. And as price came down, reached the next major intraday pivot, which was this green dotted line, previous day's high, you would have covered much more than the risk distance, and you could book at least partial profit and continue to hold the remaining position, close it probably at the end of the day. That is how you could use the gap short intraday trading technique in Nifty on the last trading day. The same technique can be used in any country, any instrument. What did we see from the global markets? The global markets were in an uptrend several months ago, as I described in those market roundups. And after that, I kept mentioning that many of them were starting to move sideways. And lately, we have seen that several of those global markets, like Japanese market, India market, they broke below their respective support lines, the respective range bound areas, broke to the downside. So that shows overall gradually the global markets are becoming weaker than they used to be. That is a study of the global markets. Let's now have a look at the USA market, for which I will use the market ETFs on Q Elite running on TradeStation. Starting with S&P 500 ETF SPY. In the weekend market roundup, I mentioned that the USA market was very strong, and though it was getting overbought, there was no imminent sign of reversal. Now has it changed? We are 2 days into the week, that is Tuesday and Monday. We can see on last Friday there was an indecision at the top signal in SPY. After that, on Monday price dropped. However, the candle shape was not bearish. It had a lower tail. On Tuesday, price dropped again. However, the candle shape was not still bearish. It is still in an uptrend. Not only it is in an uptrend, it is above the or at the upper boundary level. The weekly has displayed a bear release signal. The weekly price is falling, but it is a small bearish candle relative to the long uptrend that we had. So SPY is still remaining bullish. However, bullish doesn't mean that Q traders are going to buy. In the weekend roundup also I mentioned that price was bullish. We were at this point. However, we were overbought, shown by the stretch band indicator here, and also the fact that price was above the upper boundary level. Based on that, I very clearly mentioned, as I always do, that I was not going to take new long positions. I could continue to hold long positions that I took earlier. I could have booked partial profit in them once the resistance was covered. We'll review some of them, but I was not going to take new long trades. That was very useful because though SPY did not drop much, individual stocks, some of them dropped heavily on Monday and Tuesday, following the principle of buying only after the market makes swing low and using proper Q trade setup on technical charts would have avoided any loss that came from market's drop on Monday and Tuesday. Again, Monday and Tuesday, the market itself didn't drop much, but individual stocks, some of them dropped by a very large percentage. I didn't have to take any loss, in fact, over the last 2 days. Instead, I had some profit because of the short trades that I initiated when market was at the top. And as usual, I only discuss trades that I shared before knowing the result. So I may do the same thing today also, only discuss the shorts that I had shared earlier with you all through public channels, either forum or Twitter or YouTube at the top. So I didn't have to take any loss. The more you observe such moves and the benefit of taking longs at swing lows, trying to short at the extreme highs, the more you will get comfortable with the approach and your account balance should improve gradually. In any case, SPY dropped little, still in an uptrend, no long opportunity. QQQ similarly to SPY displayed an indecision at the top. It was weaker than SPY in the sense that it did break out and made new all-time high, but it was much later than SPY or DIA did that. On Monday, it displayed a bear release signal, price fell. On Tuesday, price fell again. Both of those candles are indecisive in shape. In weekly, price tried to go above the watermark resistance and reversed, creating a false upside breakout. The backdrop color is still green. It is still in an uptrend. It is still near upper boundary. So we are not going to take any short trade now. There is no reversal trade set up at this point. And it is trending up, so we cannot take any trend following short trade also. It's too close to upper boundaries. We are not going to take any long trade either. DIA, very similar picture. Displayed the indecision at the top last Friday. On Monday, Tuesday, price dropped with indecisive shape candles. Tuesday's close was above the trend line support, very much in an uptrend, continuing to be true, very close to upper boundary, too overbought for Q traders to take long trades, and in an uptrend there is no short trend. Now IWM was different. In the last weekend roundup, I mentioned that it was the only market ETF that was bearish in color both in weekly as well as daily. On Monday, the weekly was bearish at the end of the week. And also it had a trend line support, if I remember correctly. Let's look at the other template which shows the historical trend lines. Yes. It had a trend line support and it had a trend line resistance. So it was inside a triangle pattern. On Monday, it broke below the trend line support. On Tuesday, it dropped further. Both Monday's candle and Tuesday's candle had lower tail. So the shape was not clearly bearish. It was bearish, but we would not have taken any short trade using daily candles because of the lower tails. Now I did take a short trade in IWM. How? Because on Monday it did break below the trend line support. It was the weakest of the market ETFs, and that I knew from the weekend roundup itself. So next day when price started to go down, I could initiate the short trade using fine tune chart. And let's switch to fine tune chart now. Fine tune intraday chart. In the morning session I would use 5-minute interval. I changed to that 5-minute interval. I was ready to take a short trade, and price created the early range in the morning session and then dropped below that. That would be the short entry point using early range breakout technique, and stop would be just above early range high. In this case, previous day's close was very close to that, so I would have put stop just above previous day's close. This was my risk distance. And as price fell down, by the time it came here, I had much more profit than the risk taken in the trade, and partial profit could be booked. I did take the trade using put verticals, so I didn't exit the trade. I am continuing to hold it. So I made some profit, good profit from the IWM short trade. What is the approach? The approach is, if we are going to take a trade in market ETFs, then buy the strongest if you are bullish and short the weakest if you are bearish. If you followed my shared ideas, the last couple of trades when SPY was making new all-time high was actually bearish. I had some bullish trading ideas that I shared, but those were in industries that were weak earlier and were starting to go up, meaning in industries that were not in sync with the market. The industries which were in sync with the market, like for example Infotech, I shorted in that industry, like Infosys, Infi. And I also shorted IWM, which was weakest of the three market ETFs, and made a nice profit from that. IWM, coming back to the daily weekly chart, has a trend line support around 210. Still some distance away. Yesterday's close was 217.19. Once price comes to the trend line support, it is likely that price will stop there at least for a few days or even go up from there. But even if it goes up from there, the declining trend line resistance may be too close to take a long trade in small cap stocks at that point. Instead, we could wait for price to go to the trend line resistance and drop again, giving a very low risk shorting opportunity using the trend line resistance. If the market continues to be bearish, such a point after a retracement gives the lowest risk shorting opportunity. Now, is IWM bearish? No, it is still moving inside a triangle pattern. It is weaker than the other market ETFs, but it is moving sideways. Other market ETFs are in an uptrend. They dropped by small percentage, in fact, on Monday and Tuesday, but individual stocks dropped by large percentages, some of them. Now in Q technique, as you know, I like to combine fundamental, industry and technical strength together, and now I'm starting to combine seasonality also. Let me give some examples of stocks that I don't like to trade, and the reason will be obvious. One is window, WNDW. This is a stock of not my style. It has no fundamentals, doesn't make money, doesn't create any product. However, it shoot up like a rocket, dropped like a rock. And I remember when it shoot up like a rocket, people were starting to talk about it. That's what usually happens because these are totally unknown stocks. They go up on a hype, maybe manipulation, maybe not, nobody knows. Goes up on a hype, and that is the point when people start to talk about it. There is no reason for people to talk about it when it is in the gutter. Only when it goes up like a rocket, people start to talk about it. That is the time when retail traders start to buy, hoping that it will keep on going up. And that usually doesn't happen. They have no fundamentals at all. They don't create any product. Sometimes one may get lucky, but if we are in the unlucky game, then Las Vegas may provide better opportunities. No fundamental at all. This one I wouldn't have bought. Not my trading style, not Q guideline product. And another one is Nikola, NKLA. Again, a company that has not produced anything so far. Still, it went up like a rocket and fell back equally sharply. These instruments are not instruments to make profit consistently. If you are in the lottery game, it's okay to buy them, but to make consistent profit, Q guideline is to stick with robust fundamental stocks. Can you buy IPOs? Yes, you can buy IPOs. IPOs can be robust also, so long as you understand their technology, their product, what is new in those companies. Nikola or Window wouldn't probably meet those criteria. For example, IBD has an approach to buy IPOs. Those are robust approaches, but they wouldn't suggest buying Nikola or Window. I shared these examples because when the market comes down little bit or doesn't even come down, these are the stocks that come down hardest. On the other hand, if you look at the stock that I shared at this point, right on this day, on my forum using the pullback long trade setup, it hit the profit target when price came to the upper boundary, and for the last couple of days price is not dropping. This is what happens, not always, but this is what tends to happen in fundamentally strong stocks. Let's review the bio post that I shared. I'll not go through the entire post, but it is good to review what difference a fundamentally strong stock makes even for swing trading. When I shared it more than 10 days ago, it had a pullback setup. I'll go quickly through it. It had accelerating industry strength, life sciences, tools and services. See the fundamentals. Excellent valuation, excellent earnings growth. This is what I wanted to point out. The difference between stocks like Nikola, Window and stocks like Bio, fundamentals are very different. And when fundamentally a stock is so strong, it doesn't drop so easily. It will drop eventually if the market keeps on dropping, probably may drop, but it will be the last ones to drop because the wiser investors, larger funds, they will sell the strongest stocks last. They will sell the weakest stocks first. That's why bio is continuing to, you may say, it is continuing to go up. The other long idea that I shared, by the way, both for bio and this stock SSRM, the industries were languishing earlier. And for SSRM, I shared the buying idea right at the bottom. what I wanted to point out, see at the right edge, the price is not dropping. Whereas if we look at some of the stocks that dropped heavily, did some stocks drop heavily last 2 days? Okay, we'll come to that. Some stocks, as I mentioned, dropped a lot more than the market ETFs. I'll come back to that. But let me, at this point, go back and continue my market analysis. What I wanted to show, deviating a little bit from my usual flow, that though SPY didn't drop much, even IWM is moving sideways. Some poor fundamental stocks came down heavily much before the market started to come down, whereas fundamentally strong stocks like Bio SSRM, they didn't drop much. Now, is the market continuing to be bullish? The market ETFs say it is continuing to be strong, however overbought, so we'll not take new long positions. Let's look at the Q edge insights. I will point out the important insights. One is the percentage of stocks in the lowest bucket, the extremely low bucket below normal range of prices for S&P 1500 stocks, that jumped from 0.2% to 10% yesterday. That means yesterday was a down day. Though market didn't drop much, SPY didn't drop much, but we can see a large number of stocks, 10% is not a small percentage, 10% of stocks came below their extreme low bucket. And you can see yesterday 82% of sectors were down, 85% of industries were down, 75% of stocks were down. Monday was equally weak. And let me again emphasize one more approach of Q technique. There are traders who decide the market trend based on end of day insight. Let's say end of day, let's say IBD. IBD says that it has a follow through day, or a particular IBD stock gives a cup and handle breakout. The next day, traders may watch that stock, and as the stock allows an entry, traders tend to take the entry. However, by doing that, they ignore the new information that is available after the market open. What is an example? Based on Friday's market roundup, I mentioned market was overbought. I was not going to buy, but I also mentioned there was no sign of imminent reversal. That was true as of Friday's close. I was anyway not going to buy. But it is true, I mentioned that there was no sign of imminent reversal as of Friday's close. That doesn't mean it cannot change on Monday morning. It in fact did change. And I shared a series of tweets on Monday morning. One of them, I showed this kind of sector industry stock advance decline from the morning session itself. That was very bearish. Also, if you kept an eye on the intraday advance decline breadth and up down volume for the two composites, Nasdaq NYSE, and four major indices, Dow Jones, Nasdaq 100, S&P 500, Russell 2000, these insights were bearish right from the morning session of Monday itself. So from Monday morning itself, we knew that the market nature is changing. SPY was not dropping much on Monday, but internally, both from Q Edge and from Q Elite Market Breadth inside, we could see that the nature of the market has changed from what it was the week before, or even the week before that. It was not so bullish, and that would have helped us take profitable short trades. What was such a short trade idea I shared? That was in FFTY. And interestingly, when I shared this short idea on FFTY on Monday, which gave a go with flow short trade setup, the weekly was already bearish, price was coming down, lower high. It gave me a magenta flow candle, so I could take a short trade. In fact, I could take it using intraday charts. I didn't have to wait till the close. Why? Because I mentioned both Q edge and Q elite intraday breadth were showing weakness. So I could take a short trade, and I shared it with people, and I noticed some IBD traders, and I have great respect for IBD, but I'm emphasizing one important factor that everybody can benefit from, including IBD traders. Whatever was true the day before, that was on Friday, on Monday, it is useful to look at the market from multiple angles, assess whether the market itself is bullish. If the market has changed nature from bullish to bearish intraday in the morning session, whatever long idea I had at the weekend, I may not carry them out because market carries the maximum weight in trade success, not the individual stocks. Individual stocks I might have selected on Friday, but on Monday, looking at intraday strength weakness, which was very weak on Monday, I wouldn't have entered those trades. But I noticed several IBD traders kept on executing those trades they planned during the weekend, and invariably, I think 100% of them were stopped out either by Monday or certainly by Tuesday. 100% of them. I think, okay, let me be careful. Let's say almost 100% of them, just to be correct, in case there is some stock that continue to go. The point is, if the market has changed nature on Monday, whatever you decided during the weekend, you may rethink. Not just think that, yes, a stop loss because it is narrow, I'm still going to execute the trade. You may do that over a longer period of time. Of course, you will still make profit, but you could avoid the stress and the uncertainty of entering those trades. Instead, I actually took a short trade in FFTY when I shared it. And let me see, where did I share it? I shared it on the forum 2 days ago, Monday, 19th April, and you see the time 11:10 a.m. in the morning session. See how the charts look like at that time. Bearish shape, bearish color in the weekly, severely underperforming the market. Bearish shape, bearish color in daily, lower high also coming down from this trend line resistance. So I took some time to create the snapshot, share it. So you may imagine I would have shorted somewhere at this point. This was an ETF, IBD 50 ETF. I could wait for price to hit the trend line support to book profit, or as I often do, once the risk distance is covered, I may book profit. See what happened yesterday and also Monday after I entered. I entered somewhere around this price level. You could do the same. And as price came to yesterday's low, it covered more than the risk distance, and using GTC order, you could exit at least a partial profit. Looking at the fact that weekly had a trendline support, daily had a trendline support, you may not want to continue to hold it. That is how watching the market's weakness on Monday morning session itself and a proper trade setup in FFTY, I could take a short trade while some other traders were going ahead with executing their planned long trades that they planned during the weekend. That is not the Q guideline. Q guideline is if the market is weak, avoid taking long trades. Rethink carefully before initiating a long trade. Instead, if you were ready with some short ideas, some long ideas, go ahead with the short trades on a weekday. Another short trade I shared sometime earlier, again that was in an industry that was in sync with the market, that was Infosys. And let me change the template to show the breakdown opportunity. Infosys, a very strong stock, it was going up steadily, and then right on this day it gave a breakout trade setup. This is the instrument I mentioned. It was similar to the Japanese index. So I took a short trade on that day, and next day it dropped sharply, and I had an options position. I had more than 100% profit. I booked profit on enough lots so that the entire trade is risk-free from that point. Now let's look at Q edge, some more insight. The very useful 1 month to 1 day sector industry stock advance decline. Now we can see from 1 day to 10-day period, all are to a larger extent or smaller extent bearish than bullish. The 1 month period is still remaining bullish. We'll have to see if that continues to remain bullish or it flips to bearish at the end of the week. Looking at this transition from bullishness to bearishness from month 1 to 1 day, one would avoid taking new long trades. What about Q Finder? That shows the balance between bears and bulls. The weekly period, which was bullish during the market roundup, is now clearly bearish. The week is not over yet. As of Tuesday's close, 87% of all technical signals, all the liquid stocks and S&P 1500, weekly interval, 87% of all signals bearish, 56% strength signals bearish, trend continuation 91%, even trend reversal 90% bearish. And when it market is at very high point, I tend to see if there are larger number of bearish headwinds. In the weekend market roundup, I showed there were not many, but see now. In 2 days, we now have 85 bearish headwinds in the weekly period. There is no bullish headwind in the weekly period. So this is a sign of caution. Every time I see this large number, market tends to pull back. Of course, we'll take short trades based on the unambiguous checklists of the Q trade setups, but when I'm studying the market using different angles, this number of bearish headwinds in the weekly interval is a caution, and of course the all signals across all categories, in fact the weekly period is bearish. And if we see the daily period, also all categories are bearish. So this is a significant change from what we saw in the weekend market roundup. The technical breadth has turned bearish. You can see a very large number of bearish breakouts and even larger number of stocks with bearish flow. So you could probably combine breakouts with bearish flow to look for breakout shorting opportunities. And using Q technique, you would take them only if they are in fundamentally weak stocks in one way or another, and also stocks in weak industries. Technical breadth is bearish. Let's look at, I'll not go through all the market internal studies to save time. I will look at the mega cap top 20 and the total view. mega cap top 20 is still at a very high level near the upper boundary, not a point where I like to buy. It did break out, but it is overbought. So I mentioned in the last webinar also I was going to avoid buying mega caps, and I'm continuing with that. It is bullish, but it is overbought. Similar to SPY, similar to DIA. And if I look at the market breadth total view, was there any distribution count Monday or Tuesday? No. Monday, Tuesday, decisive shape candles, but that is not the important insight from this market view study. The important insight is that there is no distribution count. No sharp drop in the market has happened without a distribution count of 2 or more. That has not appeared yet. Now market, some stocks dropped a lot. If I go to Q Finder, let's look at the bearish stocks. And let me look at some of these stocks. See the percentages by which the individual stocks dropped: 30%, 20%, 10%, 8%. That is what I mentioned earlier. Though SPY might not have dropped much, these stocks dropped hugely. So you had to plan your trades carefully and not get caught up into one of these stocks. Let me take this, let's say, stocks that dropped by at least 10%. Let's carry out a fundamental analysis using Q Vital. I click the peer analysis button at the top left. That would take the stocks and carry out a fundamental and peer analysis using Q Vital. Retrieving data from Refinitiv. Let's look at the scorecard. These are the stocks that dropped the most yesterday. And you can see from the first column, valuation column, I am sorting by it. Most of them were overvalued. Some of them had negative earnings growth. So looking at these weaknesses, you could probably avoid taking new long positions and protect existing long positions if you had. Now, if I wanted to check their industries, I could do that one by one, or in this case, I'm just trying to see if these industries were strong over last 2 days. So I selected all the stocks together, and you could select using any column, then hit the gear, double gear icon to show the scorecard for all the industries of all these stocks that dropped by at least 10% yesterday. What is the information I'm looking for? That were they in strong industries? They dropped individually, but were they in strong industries? We can find that out from QH. My system is little bit slower today. While it is doing that, finding the industries, looking up the industries, let me also mention that even yesterday you could find some technical setup. I located one, I'll share that. Now, look at the industries of the stocks that dropped by at least 10% or more yesterday. Other than biotech, and I sorted by 1 day performance, other than the top two, biotech and financial exchange and data, all the other industries were weak. Not only weak yesterday, you can see 2 day score, even 5 day score was weak or weakening relative to what it was earlier. Looking at the weakness of the industries, you could protect your position if you had a long position. Looking at the fundamental score of the stocks that dropped most, you would know they were overvalued. You would be cautious about buying them in the first place if you bought it in recent periods. And if you bought it earlier, you would book profit when you saw that they are becoming overvalued. Now, interestingly, biotech is gaining strength. I shared a tweet on LABU a few days earlier, and before ending today's session, let's look at that LABU chart. Biotech as an industry was very weak for a long time. LABU, the biotech 3x bull ETF, it also came down heavily. Now I noticed that it came to this watermark support and created a double bottom. Since then I started tracking it. Now it is an ETF. My standard practice is, instead of buying an average ETF, sometimes I may do that. I might have taken a long position in LAB also. If I did that, I would have used synthetics or short put vertical. In fact, I took a long position in LABU using synthetics, and I decided at the time of entry itself that I will hold it long term. That's why I used synthetics. I didn't use any protective put below the synthetic. I shorted the put, bought the call, knowing pretty well that if price drops, I'll hold it, make as a longer term investment. And if it goes up, I'll first book profit in the puts, say 80% of max profit on short put position, and the call I will let it run. That was my understanding when I bought LABU using synthetics, and I bought it right when it created the double bottom, right when I shared it. Then it came down a little bit. That's fine. My plan was to continue to hold it. I'm continuing to hold it. Biotech industry strengthened. That is a positive for me. Now, when I shared LABU, I did share a fundamentally strong biotech stock. Let me see if I can look at that. It is useful to see the analysis when I shared it, so that we all get confidence on the systems and techniques. Let's look at the Twitter page if it is not here. Give me a minute. I use another monitor to look at the symbol name first. XNCR. So let me search for XNCR. Yes. 7 days ago, April 14th. Since that 7 days, many stocks had dropped significantly. But see how I selected XNCR. The biotech industry at that time itself started to go up. The percentage performance also improved, turning from negative to significant positive move. And when I looked at the biotech stocks using the scorecard, XNCR came to the top when I sorted by price performance right on that day in real time as of 2:40 p.m. 14th April. And I noticed that the stock that came to the top happened to be undervalued with earnings growth in the last quarter and a huge revenue growth as well. and I looked at the chart to complete the 360 degrees analysis, see what was happening on the charts. In the weekly, it pulled back right to the trend line support and bounced up from there with a bullish shape candle with a bull release signal. In the daily chart, it came to the trend line support, displayed this bullish headwind signal, also a bull release signal, bullish pressure, many signals. There was a trend line resistance, so one could or could not enter on the day when it bounced up from trendline support. I noticed it when it broke out of the trendline resistance, giving me a breakout setup in a fundamentally strong stock. That is how I located it, and LABU was making a double bottom at that time. XNCR, fundamentally strong biotech, was breaking out. Let's see XNCR today. XNCR. The weekly trendline support is still holding. The daily trendline support is still holding. I took a long position in XNCR and I used stock long position. It didn't have liquid option, so I took a stock long position, and I knew the market was overbought. So in this case also, I was mentally prepared that if it breaches the trendline support, either I will take a stop loss or I will continue to hold it. Why I might continue to hold it? Because it has earnings coming nearby. Let's check the earnings from the post I shared. Earnings is on 5th May, coming soon. It has accelerating earnings growth, you can see from here. From minus 117%, it improved to minus 22% and then to plus 48%. Revenue growth improved from minus 32% to plus 62 plus 1090%. So some cases, if you see continuous improvement in earnings, revenue, and the stock is undervalued, you first decide whether you want to take it across earnings. If you make a conscious decision, then you may continue to hold it. That will not be a swing trade. You are consciously deciding to hold it across earnings. So it will not be a, strictly speaking, swing trade in Q technique. We would not take risk like that. But if you are longer term holder, longer term by definition means that you are going to hold it across earnings. So in any case, I bought it also with that thought in mind that earnings was accelerating, revenue was accelerating, undervalued stock in an industry that was also improving. And though I showed you many stocks dropped significantly, XNCR is holding on to the support. Now I found another biotech that gave a breakout setup yesterday. And this is also important because if you are using the Q techniques regularly, you will be able to find trades almost every day with a proper setup. Proper setup means low risk entry. And this came in CVM, again in biotech. Why am I sharing it? Because biotech was not weak yesterday. We saw biotech, in fact, was one of the stronger. And if I see percentage change, though the market went down somewhat, many industries went down by large percentages, biotech in fact went up and its relative score was stronger. So I would look for buying opportunities in biotechs, and CVM was one of them. It gave a breakout setup, came out of the triangle pattern. The weekly also turned cyan for the first time after many weeks. So this is a breakout setup. Industry is strong. Fundamentals are not so strong. However, this may be okay. Biotechs, low cost biotechs, not so famous biotechs, they do not always have strong earnings. But if you check the detail of the stock, you will know that it is trying to find some cure for cancer, some forms of cancer. without not without the traditional techniques. I'm not an expert on medicine, but they are trying to improve the body's immunity to cure certain forms of cancer. That looked interesting, and it has a nice breakout. And sometimes you may use Zenith to look at the events and news coming. So this is CVM event chart. I'm not going to read it out, but you may read out the recent past events or upgrades or all the insight that you need in real time from Zenith or icon, and you may see some of these are having the fire symbol showing that those are significant insights, significant news, at least as per Refinitiv or Reuters. So I located CVM yesterday and I did take a long position in CVM. So I have long positions, but you can see the long positions are in stocks that are strong in one way or other in terms of fundamentals, or maybe low cost biotech, then fundamental may be ignored somewhat. They are having a proper technical setup that is low risk, and their industry is strong relatively. I never I tend to, I shouldn't always say never or always. I tend to trade only in alignment with the industry. So in this case, the industry was aligned. For case of bio, industry was aligned. For case of SSRM, industry was aligned. XNCR, industry was aligned, and I didn't have to take a big hit from those long positions. Instead, I could make a sizable profit from the short positions like Infi from IWM, and I had some other short positions. I might not have shared everything. Too many trades I take. That shows that what does it show? The global market is starting to break down, but not in a downtrend yet. The USA market is certainly not in a downtrend as a whole, but some stocks are dropping significantly. So that's a reason to be cautious, and you could be cautious by looking at the market weakness from QH, QLit intraday breadth on Monday, Tuesday. You could be cautious by not buying stocks that were overvalued using Q scorecard, and certainly you could avoid loss by not buying stocks that were overbought on Q technical charts. These examples illustrate not only how to avoid profit, but how, whatever be the market condition, you may be able to make some profit by swing trading stocks, taking small risk in each trade. Let me end today's session here. Thank you for joining. I look forward to seeing you again in our next session, which will be somewhere during the weekend. I will share the date time on Twitter, and you will come to know if you are subscribing to the YouTube channel Trading Profitably. Thanks once again. Have a great week, and no reason not to do that. Trade profitably.